So as more of these companies with a specific focus emerge, all kinds of people are going to be getting access to credit for specific things that they wouldn't be able to get otherwise. I think this is one of the most important things to me. We did raise venture capital from impact focused funds. This was important to them.
Hi everyone, and welcome to Frontera, a podcast dedicated to exploring the dynamic startup and venture capital ecosystem in Latin America and the innovators behind it all. We're your hosts, Cyrus and Tom. If you enjoy this conversation, we invite you to subscribe to our newsletter where we announce new episodes and share additional insights and resources for founders and investors alike. We'd also like to invite you to share this podcast with your friends and to leave a review on Spotify, Apple, or YouTube to help more people discover the show. We love hearing from our audience. You can connect with us on LinkedIn and Twitter by searching for La Frontera Podcast. In this episode of La Frontera, we sit down with Nico Yepes, co-founder of Moffin, a fintech infrastructure startup based in Guadalajara that's quietly transforming how data is shared in Mexico. Nico brings the investor lens, having spent years in private equity focused on emerging market financial services, while his co-founders bring deep engineering and product expertise. Together, they've built a platform that integrates messy, fragmented data into automated underwriting pipelines, unlocking faster, smarter credit decisions for lenders of all sizes. Whether you're a fintech founder, investor, or just curious about the future of financial infrastructure in LatAm, this one's for you.
We're incredibly excited to have Nico Yepes, co-founder of Moffin, on our podcast today. Nico, thank you for joining us. I actually met Nico through Matt Shar, a partner at Action Venture Lab in DC. So shout out to Matt. Appreciate the introduction. And speaking of Action, they led Muffin's $2.1 million seed round that closed in June last year. Nico, congrats on that. So I'll hand it off to you, Nico, in a bit to talk about Moffin, but I want to give our listeners a quick intro to Moffin. So Moffin is a data infrastructure and software company that's transforming the way financial institutions and other companies access and work with data for customers. Nico, would love to have you tell us a bit more about yourself and your journey to starting Moffin.
Sure. Thank you so much, Cyrus and Thomas, for having me on the podcast. It's great to be here, and I'm excited to share with our listeners a little bit more about myself and about Moffin. I grew up in New Jersey, and I spent the first part of my career working in first investment banking and then in private equity, focused exclusively on emerging market financial services companies, and started Moffin a few years ago with my co-founders, Santiago and Victor. And what we do is we help companies across Mexico or any company that is working with data for individuals and companies in Mexico access and work with that data. The number one use case for our software and for our data platform today is for credit decisioning. So of the 100 companies that are using Moffin today, over 80% are financial institutions making loans to either companies or individuals for mortgages, for auto financing, for personal loans, for SME loans, factoring. Those are the main use cases for Moffin software and data platform today.
During your time when you were transitioning into more of the LatAm M&A, what spurred that transition into more of the LatAm focus?
I knew that kind of long term, I wanted to do something entrepreneurial. I had that probably since high school age. I started a few companies that really weren't scalable, and I knew that I needed to get some hard skills. So that's why I studied economics as an undergrad, and then went into finance. But really, like longer term, I wanted to do something that would scale. And I think getting the chance to live in Latin America, see how things are done, compare that with how things are done in the United States, it's not hard to come to the conclusion that there's a lot of opportunity, right? Where there's chaos, where there's change, where there's challenges, lies opportunity. And I knew that it existed. I wasn't sure exactly how I was going to get there or when I would make that transition. But I found this opportunity to start covering companies in Latin America and felt that it was a good next step after doing banking in New York.
Yeah, no, that's a great point. That's actually part of the reason why the two of us, we were actually living in Mexico City this past summer, and it's night and day the difference, like when you have boots on the ground, the opportunities that you can find. versus trying to figure things out remotely. So you talk about the opportunities in Latin America. So that's a great segue into my next question, which is, can you talk about the steps or the path that led you to becoming a co-founder at Moffin? What did the credit ecosystem in LatAm look like when you first got started? What were the gaps that weren't being addressed? And essentially, what led you to meet your co-founders and decide to start Moffin?
I didn't know my co-founders until they were just about to start Moffin, and I didn't decide to join them as a third and late co-founder until a year and a half after I met them. So my co-founders are Santiago Aceves and Victor Agustin Diaz Mendez. Santiago has a product background. He grew up in Guadalajara, studied in Guadalajara, and worked at a number of startups, including Skydrop X and Digit, a credit card refinancing startup microlender in Guadalajara. And Victor is a little bit younger. I think Moffin, if you take like the typical age, people have a full-time job. I think Moffin was like technically like his first or second project. Victor is a software engineer, super strong technically. Started making his own video games as a teenager and learned how to program on his own from books and the internet. And both of them were working at Digit. That's where they met. And Digit raised a seed round years ago, and they ended up spending most of the money from their seed round on developing infrastructure, technological infrastructure for A, screening clients, and B, organizing and working with data for the loan portfolio, calculating what a loan balance is, what the payment is, registering late payments, what the interest would be. And turns out that making that kind of software is super, super difficult. But taking into account decimals and all these things from a core banking perspective, it's in retrospect, probably a tremendous waste of time unless you're like a new bank and you have those kinds of resources to be able to invest tens or not hundreds of millions of dollars in like your own infrastructure completely. But most companies are at Nubank, and there are tens of thousands of financial institutions across Latin America that would love to have a new technological infrastructure, a modern technological infrastructure. But years ago, there was very little software to support that kind of change. And either you buy software or you decide to build a solution in-house, hire engineers. But in this market, and how the market has been for several years now, engineers are hard to come by, especially good ones. So if you say, okay, the tens of thousands of average or even many VC-backed companies, are you going to be able to get the top-tier talent? Does it make sense to invest months in building your own solution, or maybe even years? Probably not. So that was the first thing that us three co-founders saw. We saw it from different lenses. So Victor and Santiago saw it from the lens of fintech, from companies that raise money and need to develop technological tools. Why spend the first half of your seed round and a lot of time? Most important thing for startups, now that I'm in this seat, is time. Probably not as much money, but like we need to show growth very quickly to our investors, and we need to do it in an economically efficient way. So you can either spend millions of dollars developing your own solution, which is going to take months, and then be able to validate it, or you can buy software that's going to allow you to do it very quickly, probably in a small fraction of the time, and be able to test your hypothesis. So as I'm doing it now, I would recommend using available solutions to figure out whether or not your idea is correct. And that's what we're doing. So Victor and Santiago saw that from the lens of fintech. I saw it from the lens of traditional financial institutions. I was working at a fund that had a mandate to invest in financial services companies in emerging markets, growth equity checks between $10 and $30 million. And what I saw primarily was that these companies that we invested in, which had to be profitable, had to have a track record, many of them did not have really robust or cutting edge technology. So they too had the same issue. And what we're building today is targeted for both types of companies.
So that's incredible. Let's chat a little bit then about validating Muffin's product and the time. So the time between meeting your co-founders and then actually joining them as a team, and what work you did with them in between, or what kind of progress they made in between when you guys met and then when you joined.
Sure. So I'll first comment on how I met them. At creation, we bought a stake in a SME lender, small to medium-sized enterprise lender in Mexico City called Plus Corp. So we're talking loans of at least a couple $100,000 to businesses. And with Plus Corp, the mandate was to go find other companies to do a roll-up strategy, to buy other SME lenders in Mexico and basically roll up different portfolios and apply those classic private equity scaling strategy. And the region that we were most excited about was Jalisco, Guadalajara. And so I started talking to a lot of SME lenders across the country, focusing on Guadalajara. And I came across a non-bank financial institution in Guadalajara where both of my co-founders were working. I met them in due diligence, interviewing the management team, and I learned about the problem they were solving. So what they were doing was developing a digital connection with the credit bureau in Mexico, and also working with data from SAT, which is the equivalent of the IRS. In Mexico, there's an electronic invoicing system that gives people access to, if it's accessed properly, all kinds of data on invoices collected and invoices paid from their clients. So you can get a lot of interesting information about cash flow and the company's tax declarations, et cetera. So they were working on developing these connections. Meanwhile, I saw from an investor standpoint that we were trying to do the same thing in our portfolio companies, and they were doing it with a very small budget. We're talking like a few $1,000s a month for the team of the two of them plus one more junior person. And I was like, wow, it's interesting we're coming across them. I think we should make them like heads of our like tech strategy implementation. And that didn't really align with the fund's goals. And they ended up losing their jobs after the acquisition. But it was interesting because when that happened, they needed to go search for other funding, right? They still wanted to continue to develop this MVP. And they found an angel investor by the name of Sergio Almaguer, who is the CEO and founder of Jadu, one of Mexico's most successful software companies, raised money from SoftBank and exited to Paystand a couple of years ago. And Sergio invested in Moffin through Jadu and has been a close mentor of ours ever since. So that was like how we connected. Yeah.
Obviously, data infrastructure in Latin America, it's not as well built out as it could be. And there's been progress that's been being made over the last couple of years, and you guys are part of that. So would love to learn a little bit more about how you guys tap into various data sources, combine that to help build out credit scoring or help ease credit scoring for various fintechs and financial institutions in Latin America.
Sure. I'll start with the problem there. So imagine you want to launch a company that grants credit, either to individuals or to other businesses. You're going to need to set up contracts, negotiate pricing, integrate those different data sources from a technological perspective with a number of different data providers. That's a lot of work. Once you have those connections in place, you need to probably do some engineering work to set up a way to collect that information in an efficient way and store that data from all of your customers. And it takes time to do that. Even just analyzing the first data source that we started with, it can take months to set up an account, learn how the data works. And with a lot of these companies, the documentation, especially in Latin America, is non-existent or poor. There's not a sandbox environment for you to test things. Sometimes the volumes required in order to start working with a company, like a Jumio, for example, are really high. We're talking 15,000 API calls or 15,000 consultations per year that don't roll over to the next year if you don't use them. Minimum contracts that are in the tens of thousands of dollars. So these are all hurdles for companies to get started. So why does Moffin exist? We solve all of those problems. You can start playing around with a credit product using our infrastructure in hours or days if you require certain things that require legal permissions. But our platform integrates now over a dozen data sources, from the traditional credit bureaus to more alternative data. We allow you to get information from other sources that are not integrated into Moffin. We can create through a solutions engineering team connections to data sources that are not available, but do all of the kind of data pipeline work for you. This kind of bit of a consulting work. But we've seen that in order to make things really work for our clients, we have to do a little bit of handholding. Just because of that lack of technical talent, some of our clients do have big engineering teams, but many don't. And they really appreciate having access to a service provider that has the software, infrastructure, and somebody who can provide really good support to bring things to the next level in terms of customization. So we're a platform where they can get access to data, software to help automate the analysis of it, the collection, creating custom forms. And this year, we're coming out with a number of more data infrastructure related products.
Yeah, that was actually something that I found incredibly helpful and really interesting, was the fact that you guys had forms that someone didn't need to use your API to get access to the data. They could create custom forms. And then I believe, if I'm not mistaken, you guys also help with creating decisions, like automating decisions around specific customers based off criteria that they can enter into those forms, which I thought was really interesting.
Exactly.
Yeah.
So now when you work with us on our standard to pro plans, you get access to, what we can do is we can sign an NDA.
Yeah.
And you'll get access to an engineer who will convert your credit manual into a script. And we can have different scenarios. You're going to do a personal finance loan. Great. We'll help you make a custom script to automate the decision-making related to whatever kind of credit product you have.
Yeah, that's incredibly interesting.
And right now, lending is such a huge space in Latin America, whether it's consumer or small businesses, but that lack of access to data is such a huge problem, right? A lot of, for instance, people don't have credit cards. They may not even have credit scores, right? So in Mexico, for instance, 70% of transactions are done in cash. Those don't reflect on any sort of credit score, and that data is not available. But there's so many lending companies that are targeting consumer loans or small business loans that don't have access to that data. So in a way, you guys are opening up so many new streams of customers and channels of customers for fintechs, for traditional financial institutions that formerly had a tough time lending to people that they couldn't score, right? So it's really interesting that how you guys are opening up the infrastructure there, and that value is so obvious. And I want you to give a little bit of insight into how you decided to price that, right? So price access to data when clearly you're opening up new customer lines for your clients.
On the pricing side, what happens is we have different tiers of plans that the price increases based on the number of different data sources that you're using, the features that you're using on our software, the volume of consultations, and if do you need anything customized. So it makes a lot of sense to use one of our engineers to tweak the product or build something on top of Moffin, because they do it for now dozens and dozens of companies. But the main things now are features. I prefer to, as we continue to refine the pricing, I'd like to make it more based on features and the kind of professional services or solutions engineering work rather than volumes, because in the future, I want the kind of target market to continue expanding. And in order for that to happen very easily, I think it should be based on tooling, moving up in the value chain, rather than just looking for companies with high volumes, because these kinds of companies with high volumes are less common really in Latin America.
Yeah. And so actually related to pricing and the value that you guys provide your customers, I'm curious about what your current customers were doing prior to using Moffin. So what did their day-to-day look like in terms of trying to essentially run credit on their customers? Like, what were they using before? What did they do before? And what was some of the value add or the pull that brought them over to Moffin?
Yeah. I'll take you through a example with a client we have here in Guadalajara that does car leases. Okay. So they have a balance sheet, and they work with a number of different auto agencies across Guadalajara, more than 15. And before using Moffin, they had all of these basically sales agents across the different car agencies that they're partnered with. The sales agent would ask their clients to fill out a form that would be then emailed to the credit department at this financial institution. The credit department would then process the loan. They would receive a physical signature to be able to access the credit bureau. And then they would have to do their analysis, which was manual. They'd have to go through the credit report, look at history of loan payments, analyze all that data, and then either call or email the agent and let them know whether or not they could proceed with working with that potential client who wanted to lease a car. Now, this client has been with us for over 2 years, so they've evolved with us. But fast forward to now, the commercial agents use a app or on a tablet or on a cell phone. They can fill out the information for Moffin. They can send the form directly to their client to fill out on their cell phone. We can get their permission to access the credit bureau and other sensitive information sources through a PIN or an email verification instantaneously. Then the data is sent from all the data sources that they use through Moffin, orchestrated through Moffin instantaneously. And we send an automated email within seconds directly to the commercial agent saying whether or not that client is passed. The credit department now saves a lot of time analyzing. They're not interrupted constantly by the commercial team. We have a separate module for the credit team that has the decision engine. So we signed an NDA with them. We got their credit model. We converted everything to code, and we created a portal for them to review every aspect of the credit analysis. And yeah, it's now very much automated. And now we've integrated most of the components that they have in their underwriting analysis and codified everything. There's a few more that we're rolling out and then in the next few months. So it's been a pretty dramatic transformation for that example of the car leasing company.
Yeah, clear value add and that you're providing to your customers on the business side. And then thinking about their clients, their customers, the people that they're ultimately lending to, do you have any sense of, since Muffin's been operational, the influence that you've had on customers, like interest rates that they're receiving on credit products? Do you have any sense of like how you're like promoting financial inclusion in that sense and better priced interest rates?
I don't have the data yet. I'd love to know. I think it's more of a binary outcome. For example, we're working with a company that does financing for furnishing apartments for renting out on Airbnb. So they work with a lot of data. They have access to a database from Airbnb about the things, geography to Airbnb income from properties in that zone, with data on the furniture. They also have a furniture manufacturing arm, and they take into account quality of the furniture, geographic location, effective tourism. So they look at a lot of things there. So I think and they're pulling into Muffin's decision engine all this extra data that's not typical for credit underwriting. So as more of these companies with a specific focus emerge, all kinds of people are going to be getting access to credit for specific things that they wouldn't be able to get otherwise. I think this is one of the most important things to me. We did raise venture capital from impact focused funds. This was important to them. And as an economist, I see the impact also just from a general economic principle standpoint, where we're lowering the barriers to entry for any company to start a credit product. We have clients in Moffin that are not banks, or that are not credit companies. They produce pharmaceutical products, or they could produce mattresses, but they need to grant credit to customers because the customers can't pay up front, or they need 30 days to pay. Everything and anything that any company, any consumer that needs to be given payment terms that are not all up front could be using some kind of Moffin product in the future.
Yeah, and that's one of the
Yeah. As we continue to lower the barriers to entry and provide new tools to allow anybody to grant credit or understand who they're working with, we're going to create more competition. Competition should help make companies lower interest rates to be able to compete. And at the same time, better data is going to thicken the data file for each client. And with that, they should be able to make smarter decisions and offer better interest rates, understanding the risk profile better. So that's how I see impacts in the lens of credit with Moffin.
Yeah, that's amazing. And that's one of the reasons that we're so excited about helping people find these opportunities in Latin America. If you're creating these fintech products in the US, maybe if a fintech's created, it's like marginally benefiting the average consumer. Like in Latin America, you can literally change the entire landscape and open up, like you said, like binary, like someone didn't have any access to credit. Now they do. Yeah. And you guys are really enabling that, like through kind of infrastructure, through data and providing those outcomes. So that's fantastic.
Yeah. I equate Moffin to the banking as a service boom and the aftermath as well in the United States, where previously to become a fintech in the United States, you had to build out essentially your own payment networks, build out relationships with banks, et cetera. But with banking as a service, right? Like they had Synapse, for example, I'll RIP Synapse. But with Synapse, for example, like any fintech could essentially spin up pretty quickly because you just had to integrate with an API and then bam, you had like accounts for all of your customers, you had payment networks, et cetera, ready to go. You didn't have to have 5 or 6 different integrations with various banks and payment providers. And so it made starting a fintech, for example, like very easy to do. And that's how I see Moffin fitting in. It's like, I've talked to a couple of folks that have their own like chief or head of credit risk, for example, if they're lending fintech, and they have to come up with their own models, ingest their own data, figure all of that out. And that takes time, right? But now you pretty much have a white label application that they can go through, put their credit decisioning into your white label application and are able to launch pretty much right away. So talking about data, credit decisioning, and the future, would love to learn a little bit more about, besides the data that you can get from credit bureaus, are there any other data sources that you guys are considering or that you guys have thought of, such as like telecom, utility payments, things like that? Or is there anything that you guys are pulling in right now?
So what we currently have is both credit bureaus in Mexico, Crédito, for both individuals and for companies. We also have tools to access the SAT or the IRS equivalent, where we have a wealth of information on tax returns, on invoices paid and collected. We have judicial proceedings databases going back 16 years.
That's interesting.
At the state level and at the federal level. We have what are called listas negras or blacklists. I think been in this LatAm environment for so long that I doubt myself on the English terms. And I think they're called the blacklist in English.
Yeah.
But we have that in Mexico and on a worldwide scale. So it's not like for a micro loan, we would recommend using mostly the Mexican level data. But for an SME loan where you're evaluating a legal representative too, you want to understand if they've had any issues abroad as well. We have also tooling for biometric verification or document checking that has AI capabilities. So we see this super important, especially for our clients in the microfinance space, where there's tampering with identifications, rampant fraud. So we have tooling, for example, that can allow you to use AI to determine the predicted age of a person through a selfie and see if there is a difference between that predicted age and the date of birth registered on their ID. So what that software does is first checks to see if the ID being presented is registered with whatever government database that it claims to come from. Then it does this estimation of the age of the person taking the selfie and doing the ID check. And it compares that with the date of birth on the ID. So we've seen multiple times where, a 20-year-old guy steals the ID of a 60-year-old man, very skillfully replaces the picture of the 60-year-old man with a picture of himself and then goes to try and take out a loan with that person's ID. Our software catches that and allows the client to flag those cases and not proceed to grant them a loan.
Yeah, that's really interesting. Have you guys ever considered, and I'm not sure if this is even possible, but with SME lending, right? Are there data pipelines for how timely businesses pay their invoices? Are you able to tap into data from invoicing platforms on if they're paying invoices within the 30 days, for example?
We have very exact data on invoicing. This is probably not as possible in the States because I don't think there's the same kind of electronic invoicing data. But yeah, we absolutely have that. It is available on a platform now.
Okay, got it. And that's all through the facturas and the SAT, right?
Exactly. Yeah.
Okay.
Yeah.
Got it. Yeah, no, that's the one thing I remember. I remember talking to someone in the United States who was trying to build out something like that, but for the United States. They were like, "Why is there no electronic invoicing in the United States?" It was so valuable, but yeah, that's the one downside is in the United States, that's all protected. That's all within each invoicing platform, and they don't really share that data.
Other advantages of that kind of
Yeah.
data are understanding seasonality of a business. We can look at going years back. We can see how the electronic invoicing has grown or shrunk. We can see seasonality. We can look at the concentration or distribution of those invoices by amount. We can look at the concept. It's called concepto, the type of service being purchased. For example, for a producer of a farmer, right? If they're selling corn or rice, we can see that level of data too. Contrary to popular belief, some things in Mexico are probably more advanced than in the US in that perspective.
Yeah. So backtracking and going back and touching on how machine learning and AI play, anything. So obviously you guys use it for verifying IDs, but would love to touch on like how you guys are leveraging some of the latest models in terms of making credit decisioning better, more efficient, and then maybe eliminating a little bit more bias from credit decisioning.
Yep. We've just started looking at some of those tools. From an AI perspective, we are more focused on giving companies access to tools that allow them to use AI applications themselves on top of Muffin's infrastructure, rather than developing our own AI tools right now. So the biggest problem right now in Latin America is you have hundreds, if not thousands, of different data sources that are not structured or built in a way that allows you to use the latest AI tool that financial institutions are using in the US. So what we want, it is in our plans in the future to build some of those tools, move further up on the value chain ourselves. But for now, the number one focus is making Muffin the place to have the orchestrator for your data, all of your different data sources. So you can begin using our decision engines and other tools right away. It's just not even possible to think about using any of these tools if you have your client's information organized in Excels, or if you have PDF documents saved in for different folders or different places in the cloud. That's where we're focused right now, more so than creating new AI tools. It's more of an infrastructure focus.
I have another question, a little off topic. I've been staring at this logo, this Muffin logo in the top right corner of your screen this whole time. And I'm thinking to myself, how would you guys come up with the name Muffin and the logo of an actual blue muffin? Is it related to the product itself? Like, I just need to know.
We're actually a bakery. Yeah, Thomas. We started as a bakery.
That's the storefront.
Went through some
bakery.
Went through some serious pivots. No, when we were starting this, when Santiago and Victor were thinking about how to incorporate what name to pick, they wanted to do something with Fin because they were focused on the financial services market in the beginning, and brainstormed a number of words. Muffin was like the most lovable word of all the things that they picked, and there wasn't really a deep reason for the word. Now,
there's Fin in the name.
There is Fin in the name. What I decided to explain it as years later was modern financial infrastructure, which works, but not completely, because you'll notice that there's an extra F. Yeah. So that's a story. By the time that this podcast comes out, we will have released a kind of rebranding where we're going to use a kind of tokenization of the muffin. You'll see the shape of the muffin within kind of a box. It's a little bit more abstract. We think that's more fitting for where we have gone. It's has a little bit more of a serious tone, given that we are 100% B2B focused. All of our clients are companies. And yeah, I think we've gotten a very positive reaction to our name. I think it's been a comical name because we're selling a product that is serious. It's a technological product, deals with data. We're working with institutions where data security is important. We're getting our ISO 27001 certification right now, but at the same time, approachable.
No, it's good. It's a little bit of personality. I think it's cool. I think for products such as yours that are like a little bit more like complex, they are like serious. If you're thinking about like data, thinking about finance, it puts a little bit of like a fun, interesting spin on it. I think something it reminds me of is Voss. We had Valentina Valencia on our podcast early on, and their like whole kind of like branding and marketing is just so cool. And their whole thing is like futuristic, like looking into space, and it's trying to make a product that you wouldn't think of as interesting and a problem that you don't really think of as that like fun and interesting as like cooler, like edgy. I think it's an interesting type of branding.
It'll be neat, I think, to compare. We have as a reference here for those who are able to see the logo in my frame. This is the logo as of March 2025.
The vintage logo.
The vintage logo. But we'll have another logo probably in early April.
If you guys have any merch right now of that current vintage logo, if you could hook us up with that.
Absolutely. The original muffin hats
and aprons,
perhaps. Next time I see you guys in person.
Yeah. So would love to, taking it back, would love to learn a little bit more about just like the state of infrastructure in LatAm. I don't know if you want to comment on that, just like financial infrastructure. I'm sure you guys are plugged in there a bit more than others, but I don't know. Would love to learn a little bit more about kind of like what you've seen in terms of the growth of financial infrastructure in terms of APIs connected to banks, data pipelines, et cetera.
Sure. When we first started, it was, I think, it was very basic. It has changed quite a bit in the last few years. So when we first started, the Buró de Crédito had a SOAP API that was like a VPN, and it took a very sophisticated engineer a lot of time to figure out how to integrate that. And a lot of the sources simply didn't have APIs. In the last 5 years, so that was when we started in 2020. So in the last 5 years, that's changed a lot. The Buró de Crédito has launched an API that's much, much easier to work with. It's common now for almost any legitimate data company will have a space in their website with a documentation for their API. It's much easier to find approachable documentation. It's still not ideal. There are many companies that have this documentation, but like the root quality and stability of the data is bad. Like we're talking fail rates in the high single digits on API calls where things are being built on top of scrapers. Right now in March 2025, getting data from IMS, it's like a government database for income history for individuals in Mexico. There really isn't a wonderful option. So we have multiple integrations with different sources. And if one goes out, we can switch to another. So that's where we are now. A lot has evolved. We've improved a lot in the last 5 years. It's easier for companies, but there is tons of room for improvement. And we want to be one of the companies leading those efforts for change.
So you guys are based in Guadalajara, is that right?
That's right. Yeah.
Yeah. So I read a business case for school that said it called Guadalajara like the Silicon Valley of Mexico. And I was like, I don't know if that's right. But I also haven't been to Guadalajara, so I haven't seen what's going on there. I've only spent time in Mexico City. Since Guadalajara, Mexico City, and Monterrey are like the big, I guess, like tech centers in Mexico. Can you describe what the vibe is there and like the general kind of like ecosystem in that city specifically?
So Guadalajara developed its reputation for being the Silicon Valley of Mexico, or call it like the agave valley, because here's where a lot of agave plants are cultivated, and agave plant is what is used to make tequila. But
Tequila
in the
capital.
pre-AMLO era, leading up to 2018, the government in Guadalajara provided subsidies for startups. And in that time, many of Mexico's top tech companies were born here. Wiseline, Quesky, all started in Guadalajara. Also, Guadalajara is a huge center for education in technology in Guadalajara. You have La Universidad de Guadalajara and many more, Panamericana, that produce thousands of software engineers. Those software engineers typically go and work for large corporates, large multinational companies that have some of their tech team based here. Main ones being Oracle and HP. And so it's not like San Francisco where you have Google and Facebook engineers, but you do have a lot of tech talent. So in the next administration under Andrés Manuel López Obrador, that funding dried up. And many of the tech companies from that era, 2018 to 2024, were started and decided to be based in Mexico City. Really, Mexico City is probably a better city for networking, having access to clients. It's a city of 25 million people versus a city of 5 million people. And Monterrey is roughly the same size as Guadalajara. But so all three cities are, I think, great for startups. Mexico City probably has the best commercial opportunities. Guadalajara probably has the most engineering talent at a affordable price if you want to work in person. And Monterrey has the closest proximity and culture to the US. And we chose Guadalajara really for a combination of things. One, Victor and Santiago were here. I moved here I live in Guadalajara. I've been here for 2 years. I moved here to be with them. I think it's super important when starting a company to be able to spend time in person with your co-founders and talk through difficult things with them, right? You have to make a lot of important decisions and difficult decisions in the early stages of a company. And it's been helpful to me to have my co-founder so close. I actually live in the same building as my co-founder, Santiago. So we don't have an office. My apartment is our fiscal domicile for the company. And when we have a founders day every Thursday, where we get together for at least a few hours and talk through whatever's on our to-do list or on our agenda. And more frequently, we invite clients, other employees out to cafes nearby. So we kind of use the fact that we have about half of our employees, a little bit more, based in Guadalajara. And it's a wonderful place. I think it's one of the most underrated cities in the world. It's a great place to live, super high quality of life. You're surrounded by beautiful nature. You have 4 states within a few hours driving with the beach, coastal area. So you have Nayarit, Jalisco, Colima, and Michoacan all within a few hours driving. And yeah, I think it's a great base because you also have direct flights to all the other major cities in Mexico, as well as New York, Miami, Houston, San Francisco, LA, all within our airport. So I would recommend for sure, if you're starting a company, consider Guadalajara from a talent, quality of life, cost of living perspective.
Yeah,
Get this man on a billboard stat.
Yeah, that was that's probably the best Guadalajara promo I've ever heard.
Yeah.
But everyone says that Guadalajara is amazing. I definitely want to make it down there at some point. I think like right now it seems like probably not as many foreigners there. Like right now, CDMX seems to be like the hot spot and
Which could be a
capital
good
for
thing,
remote
right?
workers and gringos
Yeah.
and
But
everyone.
maybe we
That's
should just edit out that whole last part of what I said promoting Guadalajara to keep
Yeah,
to keep
gringos do not
Guadalajara.
go to do not
Yeah,
go to
let
Guadalajara. It
let
sucks.
me
Do
just
not go.
let me just switch this up. I would seriously not recommend it.
Guadalajara rebrand
Yeah.
effective now. Yeah. Anyway, no, that's it's great. It's great hearing about that, and I'm sure there's a lot of very like deep roots of people that have been in Guadalajara forever and want to stay there because it has such like a high quality of life. It's not as quite like transient as Mexico City, perhaps, even though it is massive. But I'm definitely glad I asked that question. And so those are the tech like centers that we're talking about. In your previous career before you were a founder, where obviously like Guadalajara is a great place to be, and you're doing kind of deals like on the private equity side or growth equity side, where was that kind of like activity focused?
Number one is Mexico City. In terms of doing an analysis of my passport between 2016 and 2021, probably went to Mexico like 40 something times. Then Sao Paulo was number two, and
That's where I am right
Chile.
now.
You're in Sao Paulo right now.
Yeah.
Very cool. I love Brazil, and I think Brazil would be a great next market for us. But there's also just so much to be done in Mexico, and from an operational standpoint, commercial standpoint, team, it would be a lot to to take on international expansion. But I spent most of my time in Mexico City. I was based in Chicago, and I was traveling basically every other week to every 2 weeks to either Mexico City or Sao Paulo, or a few times a year to either Peru or Colombia. We had portfolio companies in Mexico City, in Peru, in Sao Paulo, and at the end of my time there in Chile, we closed the deal. But those were the areas of focus.
Would love to hear a little bit more from you, like what some of the challenges were in that role when you guys were evaluating potential private equity deals in Latin America.
Sure. My perspective is informed in 3 stages. So first stage was working in the M&A team, so the global industrials team doing M&A at Morgan Stanley, where our clients were frequently publicly traded companies and had teams of ex-M&A bankers, very good accountants, Big Four accountants. They were super organized. And I would build models with very high quality, easy to work with information. Then I joined Scotiabank, and for example, I had a client that was a family-owned business with about $25 million of EBITDA and a couple $100 million of revenue. And they had no idea about corporate finance, about valuations. So just the process of getting everything, like all the information we needed to do a proper sale process with them was much longer. It required me to go spend time with the family, with the management team, interview them, build all the materials from scratch. If you were working with General Electric, they'd say, oh, we're going to do this sale of this division in your company. They'd give you tons of like assets to work with, right? Like hundreds of pages of PowerPoints, things that all the M&A bankers at Morgan Stanley could then repurpose for the sale. Whereas I had to go take pictures of things, build from scratch the outline of their decks, educate the family about how valuations work. So for me, it was a much more interesting job than working at Morgan Stanley, which was a more prestigious bank. But I enjoyed the day-to-day of building those relationships and educating the client on how these things worked in Scotiabank. Then in creation, the deal sizes that we were doing were even smaller. And yeah, so the deal sizes were smaller. The companies in general were smaller. Like only one of the deals we had was brokered by, we hired or there was an M&A advisor, like Morgan Stanley was actually running one of those processes. But that was super uncommon. Normally it's like the growth equity investor has to do some hand-holding, explain how these things work, lay out this process to these mid-size businesses. So there, it could take us 6 months to a year to close a deal because we needed to hire a accounting firm to do a quality of earnings report. And many times deals would fall apart because they didn't have the information. We had to do some kind of analysis. You had to hire a specialist to look at their loan portfolio if it was a credit company. And you'd see in the due diligence that the loans were of poor quality, and that because of the number of write-offs you had to do, you'd have to write down the book value quite a bit. And then there's this huge psychological disconnect with the founder or the owner business where they thought they were going to get X million of dollars for their company, and it turns out to be way less. So that's one of the things that you have to get comfortable with if you're going to, I think, do deals in general. Like lots of these deals just don't work out. They fall apart for a number of different reasons, personalities, dynamics with the shareholders of the companies. But my experience working specifically in that growth equity role was that, yeah, it's something that takes a lot of patience. One of the deals that I worked over a year on didn't even close when I was there. It was announced like maybe 6 months after I had left.
That is insane.
Creation, maybe even later. I also spent over a year working on the acquisition of a bank that was not approved by the regulator in Mexico. We tried buying a bank from a Sofipo, and that bank acquisition was not approved, and we ended up for that deal, we hired one of the most sophisticated and well-renowned financial regulatory consultants, and it still didn't work out. These are things that you just have to get used to doing business. You can dedicate a lot of time to these projects, and they may not work out.
Yeah. The point about buying a bank, that's really interesting. What was the goal with that? Just buying, were you guys was it more of a turnaround project, or was it more of a buy and hold for cash flow? What was the idea there with purchasing a bank?
There's certain attributes to having a banking license, specifically around deposit taking, that give you a great advantage in financial services. So what's happening at the time, and what's still happening in Mexico now years later, is getting access to funding is really difficult. And there's a lot of lenders that are charging rates in the high teens for debt. So what this company wanted to do was switch from a Sofipo license to a banking license. And the main difference there between those two licenses is the government granted insurance on deposits. For example, if you're a Sofipo, I can't remember the exact details, but it's like a high multiple, like a double-digit multiple of your insurance. In the US, you have this like FDIC insurance of, I think it's like $250,000 for every single bank account that you have. In Mexico, it's like a few $1,000s for a Sofipo, and then many $1,000s for a bank. So the issue with having a Sofipo license, there's, I think, roughly 50 Sofipo licenses and roughly 50 banking licenses in Mexico. Because if you have the Sofipo license, everybody can give you, many of your clients can give you deposits, or you can have you can offer deposits with a certain interest rate. But if people know that the insured amount on those deposits is only like $1,000, good luck getting any serious amount of deposits, because people are always going to be fearing a bank run, especially in emerging markets. There's just a higher level of caution towards financial institutions in emerging markets than in the United States. Even when I meet and speak with educated people, there's less willingness here to use credit cards, even if they give you points, even if you're paying off the balance before the date where they start generating interest. There's culturally a big difference in how people view financial services here in Latin America than in the US.
It's tough because there's this dynamic of people don't trust financial institutions, which I don't blame them. Who's this new player on the block? So then everyone's like in this battle of how do we build trust with the potential customers that we have? And it's tough, especially if your cash is not insured past a certain amount. I brought up Synapse as an example earlier, but that's like a prime example of what happens when trust is destroyed in the United States. Synapse went down, like thousands of people, hundreds of thousands of people, I think, lost access to their money overnight. pretty much. And some people still haven't gotten their money out from some of these some of these fintech players because snaps went down essentially.
Yeah, I was just having a conversation today actually with a founder he's a gringo, not really any ties to Latin America. He just saw an opportunity to bring a fintech to LatAm. And he asked me what I thought about go to market in Mexico and Brazil and like what any sort of tips for him were. And I was like, man, I think you're just going to have to go there and see, because like fundamentally the way people view financial institutions and everything is so different. Like culturally, everything is so different that you really have to see for yourself or have a co-founder or someone that understands that it is from there. It's really hard to come in as a complete outsider with no sort of context for anything and try to like sell a product. So I told him, I was like, yeah, man, you're just gonna have to spend some time in Mexico, but don't go to Guadalajara. Whatever you do, just don't go there.
Do not go. But yeah.
One of the things I do want to ask though, you talk a lot about like the opportunities in Latin America and all the great things that you guys are doing at Moffin and other fintechs are doing. What's your vision, like future state of infrastructure for credit, lending, and everything we could talk just Mexico or Latin America in general, like the improvement that you want to see over the next sort of like decade, call it?
We want to help companies really replace this traditional way of working with documents, with data, decision-making, visualization of data. We want any aspiring data entrepreneur who is, the 20-year-old guy studying computer science in Mexico City who has a great way of extracting data from Strava about my run this morning. We want that aspiring budding entrepreneur to be able to create that data set, be able to put that data on Moffin, monetize that data set, have us distribute it to insurance companies, to banks, whatever. And we want Moffin to be this trust enabler, this data orchestration platform and trust enabler that allows banks to establish confidence or trust between them and their clients, whether they're individuals and companies, and open a whole lot of other opportunities for people working together, whether it's renting out your apartment to somebody, whether it's hiring a babysitter for your kid or somebody to take care of your dog. All these things are possible now on Moffin, but what's missing is the go-to-market strategy, right? As a startup, we need to focus on what's going to be the most effective scaling strategy, right? And if we attack 10 problems at once, we're probably going to fail. So we're focused on B2B now, but we want Moffin to be Latin America's platform for data orchestration and for working with data to take out insights, decision-making, et cetera, in a number of use cases. That's where we're headed and what the goal is.
That's an incredible answer. Which, I don't know. I think, first of all, great question, incredible answer. And I think we're just going to have to end on that.
All right, great.
Mic drop.
Yeah, mic drop.
You can drop your brand new mic. Don't break it though.
Just bought this an hour ago.
That's dedication to the craft. I appreciate that.
It's like equivalent of a guitar.
Yeah.
A rock star.
Well, Nico, this has been a great conversation and I appreciate your time, man. So thank you for that.
Thank you so much for having me, Cyrus and Thomas. It's been great to talk with you both and also get to know you over the past hour or so.
Igualmente.
Thank you for tuning in to another episode of La Frontera. We hope you enjoyed the show. You can listen to more great conversations on our Spotify, as well as on your other favorite streaming platforms. You can find us online at lafronterapodcast.com, and make sure to subscribe to our newsletter for show notes and to stay in the loop for new content. Ciao for now.